Just hope my daughters don't come in and say hello.
It could be fun.
It's okay. It's okay if they do. It doesn't usually happen at happy hour, but this is something that could happen.
That's right, and we're live. So, Mike, why don't you maybe take us away with the disclaimers before we get going into the serious business or semi-serious business?
Yeah, of course. Well, yeah, we've got a couple of great guests. We've got Matthew Edwards and Rob Furse here, and I think I'm going to let them introduce themselves a little bit as we get on. But as usual, we're going to have a wide-ranging conversation. Today's topic is the evolving landscape of cryptocurrencies, Bitcoin, and whatnot. I think almost a whole world of change has happened in only 3 or 4 months since we last had a couple of gentlemen on to talk more about this. And I think these guys offer some pretty interesting and novel points of view. So as these novel points of views are shared, please go and get advice from a real financial professional, not like any of the people on this particular call today. Make sure if you're doing anything in these crazy markets that you consult a real professional. Today, we're going to have a conversation about many things, and some of them will be potentially at the cutting edge of current beliefs, current status quos and whatnot. So we'd like to have wide-ranging conversations that have the freedom to do so. So make sure you get professional advice if you're going to act on anything. And then lastly, my drink today is a nice, I'm having a nice cognac, keeping my keto in place. And cheers, gentlemen. And thank you for taking the time to join us.
Cheers. It's a unusually hot day here in Toronto, so going for a nice cold beer. As is Rob, I believe.
Yeah, absolutely cold beer.
I love it. What are you having, Matt?
Yeah, I was going to say it's a cold day down here in South Lake, Texas, but I don't know if you guys are IPA guys, but this Sculpin IPA is my favorite. Nice little San Diego brewery.
Looks very nice.
I like that. So why don't we kick it off with a little bit about each of yourselves, just to give some scope as to what your financial history is like, because you both have a pretty interesting financial sort of career history, how you came to know a little bit about this field. And I think you both come at this from very unique but very insightful positions as this sort of frontier asset class is developing. And so maybe, Matt, we can start with you, and you can just give us your sort of journey, if you will.
Yeah, sure. So thanks for that. Thanks for having me. Nice to meet you guys. So I grew up in the traditional hedge fund world. Spent the formative part of my career at a firm called Grosvenor Capital Management, which I suspect most people in the space have heard of. Grosvenor is one of the oldest fund of funds in the world. In fact, I think it might be the second oldest, the oldest US-based fund of funds, started in 1971. So I joined the firm back in 2001 and spent about 13 or 14 years or so at the firm. Vast majority of my time spent there was on the manager due diligence side of the equation. So over the course of my tenure at the firm, I helped lead due diligence on several dozen hedge funds across the globe, deployed several $1 billion on the back of that. Also helped manage a number of multi-manager, multi-strategy portfolios at the firm. Got to witness quite a bit of growth in the traditional hedge fund space. Grosvenor was really kind of at the tip of the spear as it relates to institutionalization of hedge fund investments. Joined the firm again back in 2001. We were about $2.5 billion in AUM. I left in 2014 when we were about 50 billion. So it was quite the ride. The cool thing was, I'm here in South Lake, Texas. I grew up in Garland, Texas, which is relatively nearby. But I was fortunate to be given responsibility for Asia at the firm. So I ended up becoming our Asia strategy head and got to move to Tokyo back in 2006. And then I opened the Hong Kong office for the firm back in January 2013. So that was a wonderful kind of training ground to learn about alternative investing, particularly within the marketable securities space. Got to meet some phenomenally talented investors all over the world, got to work with some great people at Grosvenor, and it was a wonderful training ground for me. And then I helped start a hedge fund in Hong Kong having been on the other side of the table, I was, of course, developed a natural curiosity about that side of the table. And so ended up helping to launch a global macro fund in Hong Kong, started by the former co-head of Asia macro trading at Goldman Sachs, which was a really, really fun ride. I got to work with some wonderful people, got to see how the sausage was made, so to speak, and got to sit on that other side of the table and interact with allocators globally. So, over the course of the better part of 17, 18 years in traditional hedge funds, I really got to see all sorts of different types of businesses and strategies and just meet some wonderful people. I left hedge funds, having, which we'll probably talk about a little bit later on in the discussion, having grown a little bit disenchanted with the notion of sustainable alpha in traditional liquid capital markets, and tried my hand at some consulting type work around leadership advisory and talent assessment, which was a curiosity of mine. And somewhere along the way, ended up going down the crypto rabbit hole at the behest of some friends of mine who are quite active in the space. I'm not a technologist by any stretch of the imagination, but one thing that appealed to me pretty immediately was it sort of served as the antithesis of my old world, and that it was the definition of inefficient. And so that really scratched a curiosity of mine. I immediately became interested in the space, started learning quite a bit more about it. Ended up briefly hooking up with a group in Hong Kong that actually just listed on NASDAQ via SPAC. It is SPAC season after all. A group called Diginex, which is, they're doing a number of different things, really trying to build sort of the infrastructure to facilitate the institutionalization of this asset class. I was initially helping them out with a number of different things at the topco level, and then saw that they were trying to build an asset management piece of the business, at the center of which would sit a fund of funds. Obviously, that was right up my alley. Started to kind of build that out for them, but then just got to the point where I thought to myself, why am I building a startup within a startup when I can go build that startup on my own? So here we are today. We are in the process of launching Dalpha Capital Management, which is will be a fund of funds focused purely on digital asset trading strategies. We have a team of 5 people. We're really trying to do kind of similar to what Grosvenor did back in the mid-90s, which was provide that institutional on-ramp into a space that is a little bit scary for most. It can be opaque. There's a lot of cowboy behavior. Risk management's an afterthought. Operational deficiencies abound, but offers some pretty compelling risk-return profiles. And so that's the same thing that we want to do with Dalpha, and we're pretty excited at the prospect. We see history rhyming quite a bit in terms of where we are in the maturation of the asset class and the practitioners looking to capitalize upon it, and where we were back in the early days of traditional hedge funds. So that's us in a nutshell.
Yeah, that's a very interesting.
That's great
for us to pull on to. I think a little bit later on. How about you, Rob?
Sure. Yeah. And thanks for having me. It's great to be here. As Mike knows, I'm the co-founder of a Canadian brokerage called Echelon Wealth Partners. We're about 70 advisors managing around $6 billion in client assets. And we have a kind of mid-tier capital markets group of about 50 professionals. So that, as I said, that started 10 years ago. It actually started out as something called Europac Canada, which was an offshoot with Peter Schiff, of all people. And those who know crypto know that Peter is, very vocal against Bitcoin, which is kind of ironic because, that partnership started as a really kind of a play on hard assets. Peter at that time was, he called the housing crisis. And of course, he was and still is a big advocate for hard assets, gold being, the leading asset. And that made a lot of sense for us as Canadians. We love hard assets, and we thought that kind of association would do well to have on our side, as we were sort of 2 guys in a dream starting a brokerage here in Canada. So that's sort of the background of Echelon. How I got into the securities business is a little bit circuitous itself. I took an English degree, which is not the natural progression into finance, and decided I didn't want to go the lawyer teacher route. So I actually ended up becoming kind of a computer tech project manager in the late 90s, early 2000s, traded like a maniac through the .com boom, as it were, even though in Canada it was only about a 6-month kind of Mayflower or Mayfly kind of season. But that really kind of was the jet fuel to trying to understand markets and what actually just happened here on the back of that, which led to an investigation on money, and which led to gold, which led to starting to become an investor and I guess a speculator of sorts in junior gold companies. And me, along with some of my friends who are, kind of all part of this together, became, I guess, kind of pulled into the capital markets. I had a friend who got hired into a hedge fund right out of his basement. And it was that time in the cycle in the early 2000s where it was just coming back into favor, kind of the gold theme, the hard asset theme. And so what we were doing, kind of digging around for those, those early stage companies was actually kind of a rare skill, believe it or not. And so started doing basically non-brokered private placements, kind of just early stage financings, got pulled into what we call an exempt market dealer here in Canada now. So sort of for accredited investors and doing deals for accredited investors and institutions, and rode that wave right into 07, 08 until everything went kaboom, as we know. And then that was the impetus for reforming. And we circle right back to the cold call to Peter Schiff and the start of Echelon. So that's sort of the roundabout cycle that's brought me here today. I guess I'll mention the Bitcoin angle as well, which for me started in late 2016. And actually, like, I think a lot of people, I feel like I was super late, given that I had the perfect sort of training for understanding and be open to Bitcoin, having kind of the computer background, understanding the tech side, of being comfortable with that, and the hard asset theme. Like, those are the two real skill sets that help with the understanding. And I just have to confess, even though I've been aware of it since 2013 for sure, and even earlier then, because I know we looked at setting up some mining rigs and we had free power in 2013. I did not understand it until I read an article that talked about the 21 million cap, and I was like, holy cow, like, this could actually work. The scarcity aspect of it just immediately leaped out at me. So that pulled me down the rabbit hole from literally that instant. I've just been talking to anyone I can in the space here in Canada and elsewhere, just trying to make connections. I feel like it's a new paradigm, and it's very difficult for, I think a lot of people to understand. But once you do understand it, I think you understand the power of it. So, I feel like we have maybe a special knowledge, or like a superpower almost at this point. And maybe we're wrong, maybe I'm wrong, but that's what makes it very exciting for me. So that's my intro.
And Rob, we're just let's start jumping. It's called Riffs, so we're going to riff from here. Where do you think you've got a significant client base, $6 billion in assets? Where do you think the retail advisor lands on that? And then from your institutional book, where do you think the adoption rate is? Where are we in the Overton window of the acceptance of this kind of strange new, call it digital gold, if you will, in the minds of sort of broad advisors? And I'll put that out to you, Matt, as well, on sort of second.
Sure. So we're very early still. Like, I think earlier than people who are in the space, or even in the financial space, that are reading about it more than the average person. I don't think we truly appreciate probably how early we are. It's still very much the educational phase. And I can certainly say that for our advisors. I've written a couple white papers. I've had conversations. We were part of the 3IQ product, the Prospectus Cleared Bitcoin Fund. So we're having those conversations, but it takes time. It takes time to accept sort of a new paradigm, a new asset class. And I would say that's, in general, still where we are. There's a chart I saw on the internet yesterday. I think it was by Willy Woo, who's sort of a well-known Twitter quantitative guy, tracks some of the good crypto metrics. And he was kind of making the argument that we were still in the innovator phase and maybe just passing over into the early adopter phase. So kind of like 2.4% adoption. And I sometimes feel like maybe we're farther along, but truthfully, that's probably pretty accurate. We're just scratching the surface of understanding and adoption. So maybe I'll get Matt's thoughts as well here, so I don't monopolize it.
Yeah, I fully agree with that assessment. I mean, it's quite clear to me that we are certainly early days. Our focus as a firm tends to be more on the institutional side of the equation, which is, in my estimation at least, that's basically all white space at the moment. There have been obviously some announcements relatively high profile here recently with some of the publicly listed companies allocating some portion of their balance sheet to Bitcoin. And, we've seen a couple of the endowments. There was a piece over the weekend in Forbes or Fortune about Paradigm, which is a very successful VC group. That was able to raise a fairly significant amount of capital from the Harvards and the Stanfords and Yales of the world. So we have seen a few more kind of institutional type investors like the endowments and foundations kind of dip their toe in the space. From what we've been able to surmise thus far, the vast majority of that has been more on the kind of less liquid side of the spectrum. And I think maybe to Rob's point around sort of this whole notion of discovery and education and what have you, I think it's probably easier for these professional investors to kind of think about this as an innovative new technology, right? And so where do they have a budget for that in the context of their broader asset allocation? It's in the VC bucket, right? So it's kind of easier for them to perform that calculus in their own minds and carve off, a couple % of the portfolio just to kind of see how this goes. We operate on the complete opposite side of the spectrum, which we think there's still plenty of opportunity there as well to kind of complement that less liquid approach. But on that side of the spectrum, there just really hasn't been much activity yet. So it's all, in our minds, it's all white space.
It's interesting that the institutions have to kind of allocate it into a VC bucket or something that already exists. I mean, I think it was really noteworthy with the MicroStrategy. I'm sure you guys saw the Michael Saylor MicroStrategy transaction where, and for those who don't know it, MicroStrategy is a publicly traded NASDAQ company, a couple billion market cap, and had 500 million in cash. And the CEO of that company, a guy named Michael Saylor, publicly came out over the last couple weeks and said, we've allocated almost all of it, 425 million to Bitcoin. So we bought 38,000 odd Bitcoin. That, I think, is the leading edge of what we're likely to see more of. And it makes more sense to me than trying to, shoehorn it into a VC bucket, notwithstanding, we know how that kind of process works. People have their buckets, they have their processes, and they may not have room for an asset class that they're still trying to figure out if it exists or not.
Yeah, that makes sense. There's a lot of legacy frameworks of how to allocate capital that can embrace gold because it has this 5,000-year history. But the new entrant in the field, the so-called digital gold, will take some time for the acceptance. What do you think the news of guys like Paul Tudor Jones coming out publicly and embracing the asset class as a huge opportunity, and Novogratz, some of these guys that have made and earned their wings in the global macro hedge fund space, what does that do for the space?
I'm happy to jump on this, Matt, if you...
Sure.
I think it's huge. I think it's the leading edge of what we're going to just see, kind of a wave behind that. I mean, guys like Paul Tudor Jones are very respected, successful macro guys. And when they come out, even though he did it through futures and maybe not the purest way that, Bitcoiners might want, recognizing the value of Bitcoin in a portfolio and the asymmetric returns, that's a big endorsement. And I think that gives social proof to other participants, especially other institutional managers. So, I mean, there's a lot of chatter about Ray Dalio, because he's basically makes a complete argument for Bitcoin, except that he doesn't advocate for Bitcoin, right? And people will talk about Elon Musk, will talk about the treasury of Apple, and a lot of this stuff is early, but it paves the way. This stuff paves the way. Similarly with the PayPal announcement, right? Like now you just got a major institution endorsing it as a business, and that brings legitimacy. Apart from just the infrastructure that it brings, and potentially the wave of buying and the price signal that quite possibly will issue. Yeah. So, and we're seeing these kind of things happen faster and faster, right? You've got last week you've got Mike Saylor and MicroStrategy. On the week before it was Paul Tudor Jones. Now it's PayPal. Now PayPal's talking about buying BitGo. Coinbase is going to IPO, right? So there's a stack of news, and we could go on and on about kind of all the things that are happening around it. Kraken be getting a bank license. I mean, there's a whole bunch of things that are really tying it to paradigms that people understand, and that is very helpful.
Yeah, if I just add a couple of thoughts there, I think it's been interesting. Some of the earlier movers in terms of professional money managers have obviously come from the macro side of the spectrum, right? Paul Tudor Jones obviously being probably the most high profile and most recent in terms of the big splash in the space. But guys like Novo, guys like Dan Moorhead at Pantera, Dan Tapiero as well, who's been active in the space. It's sort of, to me, it makes sense that macro practitioners would gravitate towards this space. There's obviously the macroeconomic component of it in terms of, we have this emergent store of value that is literally just kind of taking shape by the day, and the potential inflationary protection elements associated with this finite resource. And I think that's what Paul Tudor Jones has focused on in his letters and so forth. So, but there's also this notion of asymmetry, right? And there's been a number of pieces. I think Fidelity was the most recent one to publish an analysis around just take your typical 60-40 portfolio and you carve off some percentage to Bitcoin. And notwithstanding the fact that Bitcoin in absolute return terms is a highly volatile asset, right? And is therefore quite risky in traditional metrics. Via diversification effects, it actually helps to improve the risk-adjusted returns of a portfolio, right? And I think they came up with the optimal amount was somewhere like 3 or 4% carved off to Bitcoin. So that's all well and good, and that case has been made a number of times. Fidelity was just the most recent one to publish something along those lines, but you haven't, up to this point at least, it's been mostly an academic exercise, right? Institutions haven't really kind of followed suit and said, okay, well, that makes great sense. I'm therefore going to allocate 2 to 3% of my book to Bitcoin. And the reason for that, in my mind at least, is thinking as an allocator and thinking about how allocators make decisions. The idea of this asymmetric risk return profile where you could make 10 times your money or you could lose probably not 100%. I'm not convinced Bitcoin could ever go to zero. I think there's too many believers out there in the world. There'll always be a bid, but you could lose, as we saw in 2018, you could lose 70, 75%, right? So if you think about it in the context of an allocator, that's a big ask, right? To be able to, even if the theoretical upside is 10 times, you still need to entertain the notion that you could be down 75% mark to market.
Career risk.
That's really hard. There's massive career risk and there's massive blame aversion. And I understand all of it, as Zeckhauser refers to it as, I get it. But for the macro guys, asymmetry is what they do, right? They lick their chops at the notion of this stuff. So it makes total sense to me that the macro guys are getting involved in allocating to the space. And frankly, in my mind, Paul Tudor Jones was by far the most bullish development from a pure asset allocation perspective. I actually have a contrarian view on MicroStrategy where I think it was not a bullish development at all. We can talk about that if you'd like. But I think Paul Tudor Jones for sure not just allocating to the space, but just his walking through his thought process, right? And helping people understand this is how we view this asset as a potential hedge against what he called the great monetary inflation. But my own caveat to all of this is all well and good, but I think the other thing that's potentially holding us back somewhat is this all still remains purely theoretical in nature, right? Because Bitcoin's been around really since 2000, so it's been around the better part of 10 years now, right? And we haven't really seen it tested in a period of inflation, right, or hyperinflation. So we don't really know how it would perform in that scenario. There's plenty of reasons to believe that it would perform well for all the obvious reasons that folks have spoken and written about, but we don't know. So it's contemplating theoretical future states of the world. First of all, that inflation is going to come back in any form, which I think plenty of people will debate. But also, in the event inflation does return, Bitcoin will actually serve as a hedge, which, again, I appreciate the sort of academic approach to it and why people would believe that, but we don't really know yet, which is, I think, something else that's probably holding some people back.
I kind of want to pull on a couple of threads that you dropped as you were explaining your thought process there. You mentioned resource in describing Bitcoin, and you also described it earlier as a store of value. And obviously, I don't have to tell you guys that there's a lot of people that would like to take the opposite side of that argument and say that Bitcoin is neither of the two. So I was wondering if you guys might take a stab at making that argument. Why would investors see it both as a store of value and perhaps as a resource as well?
Well, the store of value, I think, is relatively simple. Like, we've never had an asset that's got defined scarcity, right? Even gold, you can go mine more of it. It's whatever it is, 2% a year comes out. You could get more if the price signals it to the market. You should get more. So I think that I don't think we have to overcomplicate that side of it. There's lots of question marks. There's so many so-called Bitcoin myths about why you might not be confident in the 21 million or the Bitcoin network, which we could spend a good day and a half debunking all of them, and I guess we're in the process of the market working through them, quite frankly. But yeah, I mean, I think if you can get yourself through the Bitcoin myths and get over the hurdles, right, is it's not backed by anything, right? I mean, well, what is money? Is money as an as an informational technology? Where does it say you have to have intrinsic value? Nowhere, right? Scarcity is that quality. I think people confuse intrinsic for scarcity. And then there's all the other qualities, which we don't need to get into that unless we want to. But so I think there's a discovery process obviously going on, but it is I fail to see none of the Bitcoin myths. They're all exploded for me. Obviously, got my own comfort on that. Obviously, and then there's the. And by the way, thank you for the Zeckhauser. I actually ended up reading that paper because of you, Matt, which was great. I hadn't seen any work kind of in that type of framework, which just makes so much more sense for for how I think of the world, and so it was very helpful. But I mean, there's so much unknowables and unknowns around Bitcoin, but I just can't. So I can't conceive. I guess by definition, they're unknowable, but beyond that, I can't conceive of how it fails. If money converges, or if economic systems converge to one form of money, and this is the best form of money, which was sort of the original thesis and the eureka moment for me, then that's the thesis right there. That's the store of value, and it just seems like the world is waking up to that. There's been nothing I've seen that's contraindicated any of that. And so I'm interested, Matt, in why you think it's bearish on the Michael Saylor. I think that's an interesting place to go.
Well, I maybe I misspoke. I don't necessarily view it as bearish per se. In fact, it's probably quite bullish. But I just I suppose our take is a little bit contrarian, and as sounds like you've probably gone down the crypto Twitter rabbit hole, and
Probably too far.
probably too far. I certainly don't recommend it for anyone, or everyone rather. Certainly not those that are more faint of heart. But it's there's a I think there's an insecurity that kind of underpins the space, and it's understandable because this is a space that particularly in its early years, was it was really kind of the cyberpunks and then the misfits and what have you that are a little bit lying outside the system, right, and on the periphery.
Yep. Yep.
And so, but that also means that there's a very strong sense of solidarity, right? And but within that solidarity, there's a massive echo chamber. And so anything that could be viewed as potentially bullish or supportive of Bitcoin, therefore must be good, right? No matter what. And I look at the case of MicroStrategy without going into too much detail, but I just kind of wonder, okay, so they basically just allocated, first of all, what's the purpose of a treasury function? And the second question would be, they just allocated 98% of their net cash to a single asset, right? Which happens to be one of the most volatile assets in the world, right? And so that in and of itself, I think should certainly raise some questions as to the responsibility of an action like that, right? If my friend were super bullish on Apple and told me that 98% of his liquid net worth was invested in Apple, I'd be like, maybe might want to diversify a little bit, not. So that's one element, and two, it's I just find it interesting. MicroStrategy came out of the blue. They had nothing to do with crypto as a business. Michael Saylor had nothing to say about crypto, and then all of a sudden, he's now kind of the hero of the Bitcoin universe, tweeting every day about Bitcoin. He's tweeted more in the past 2 months than he has in the past 3 years. And so I just think it's kind of interesting. And if you look at their share price up until the point that they purchased Bitcoin versus what the share price has done post that acquisition, I just think it's kind of an interesting chart to look at, right? Now, that's not to say it's not a brilliant strategy. I think it is commercially, and it could turn out to be a phenomenally successful strategy and one that's quite profitable for everyone involved. But I just kind of look at it and I'm like, well, that's just sort of an interesting thing that happened. But the Bitcoin space loves it because it's bullish and it sort of fits into the narrative.
Yeah. Look, I think the echo chamber, I think, is a great point. I'll make a couple counterpoints to that. So the treasury for MicroStrategy, I guess at least as per kind of Michael Saylor's version, he didn't feel like they are getting value in the public stock for the treasury, and I guess they don't need that cash, right? It's just kind of accumulating. They don't need it for working capital. They don't need it to run their business. So I think it's fundamentally a little different for them to allocate 100% of that versus your theoretical buddy who's allocating his maybe his net worth, right, where there's true kind of risk if things go pear-shaped. But you're absolutely correct. I think in the other respects, like he has become sort of this emblem for Bitcoin Twitter, whatever you want to call it. So the echo chamber is big and it's loud, but the thought process that Michael went through, right, and he's been on every podcast I think that exists out there in the last couple of months, is exactly the thought process that I believed any intelligent capital allocator would go through. And he's very articulate in going through, okay, well, if it's not cash because it's a melting ice cube, is it gold? Is it stocks? And he goes through all the reasons why it isn't. And then you get into the, why Bitcoin versus any other altcoin? And he actually brings, I think, some interesting kind of new ways of looking at it in terms of saying, look, this is 100 billion plus market cap, and that's very similar to other, dematerialized networks, and citing Apple and Google, that's a threshold sort of size, and Bitcoin is dematerializing money in the same way that we dematerialize these other networks, and massive value was unleashed. And who knows, right? But I think that is new into the dialogue. And this isn't, he's got credibility and a history in this space. And he's got a history of being very vocal about things and not right about everything. But I think those are very interesting. The fact that he shared his thought process, I feel like other people will go through that journey as well. So for me, that was important.
Look, I think he's done a great job of shaping a narrative. I think he's done a great job of talking his book, as we say. And I'll just leave you with one sort of point of comparison, which I think is important to consider. So a few days after that acquisition, Square came out and announced their own. Their allocation to the space was 50 million. They purchased 50 million worth of Bitcoin. On, I think their cash on hand is 2.5 billion. They've got, I think, 2 billion of debt. So it was 10% of their net cash, right? So 10% versus 98% is a meaningful delta, particularly when you contemplate the fact that Square is a business that derives a meaningful percentage of its revenue from Bitcoin, right? Yep. Mm-hmm. And Jack Dorsey, the CEO of Square, as you know, is also CEO of Twitter. Yeah. And he has one thing on his Twitter profile, which is Bitcoin.
Yeah.
So that I think is interesting to contemplate.
I think that's a study in personality contrast, and it probably speaks to the ego and let's just call it focus, to be diplomatic, of Michael Saylor.
I just think it's
but I don't think he's wrong either.
Look, he'll probably end up being proven totally correct, and this will be a brilliant strategy. But outcome bias cuts both ways, right? Just because the outcome is a positive one. Doesn't mean the decision making was.
Then what's the downside? It goes to zero, and you generated another couple $100 million presumably from your business in the meantime. So maybe it's maybe it is a brilliant strategy. Well, time will tell.
Yeah.
Well, it's interesting, right? The idea of this is narrative economics. So I like to talk about the Rolling Stones and probably the band of our era, the one that represents the music that we most listen to, but they're no Mozart. They haven't been around 500 years. Gold's been around 5,000 years. It has a proven track record to hedge inflation, to give us that inflationary hedge when we get into sort of MMT type scenarios, which we're in now. So if we think about the global macro scenario, I wonder to what extent money being a store of value, a unit of account, or a medium of exchange. I mean, those are the three things that create money. And I think the unit of account's probably pretty good. We can all agree. I mean, 10 minutes might be a longer time than you want to, with the technology is going to improve. The medium of exchange and the store of value are the two things now that they're sort of interwoven as compromising one another. If your volatility is too high, that compromises the ability to have a medium of exchange. If you owe me X dollars on an invoice or X Bitcoins on an invoice, and that's going to vary by 20 or 30% between my billing and my receiving, that's a bit of a challenge, both for the unit of account and the store of value. So, but again, it's early stages, but what do you guys think of that side of it? Like if we're going to argue that Bitcoin is digital gold, I suppose, gold's not worth anything either. It just, I can get a brick of it and I can hold my door open on a windy day, but there's no economic use to it. And it's just the perceived notion of that value of the commons, if you will. And I guess we're crossing that labyrinth for Bitcoin. Is that what we're supposed to believe? I'm taking a bit of a skeptic's point of view here, only just for a moment, just for fun. But what do you guys say to that type of question or discussion?
I've got a lot to say, but Matt, you should take the first crack at this one.
Yeah, sure. So look, I think in my mind, the way I think about it is the current use case and the future use case. And we're speaking about Bitcoin in particular at the moment. And obviously, there's plenty of other digital assets out there. But so in the case of Bitcoin, in my mind, the primary use case at the moment is purely speculation, right? And I think entertaining the possibility that folks will use this for transactions. I know some of the hardcore believers do. And in fact, I've done it myself, but the reality is for an asset that's so volatile, as you know, it's hard to use it as a medium of exchange, right? Now that may change in the future. I myself am skeptical that governments will allow that to happen. I think, the render under Caesar, I think it's going to be hard to expect that the US government or China or whomever will be willing to sort of give up control and allow for this currency to facilitate transactions. Not because, it's super, the reality is Bitcoin isn't super private. I mean, you can actually audit the trail, the transaction trail pretty easily. It's more because they just need to control the monetary supply, right? And they need to know what that looks like. And I think giving up that sort of control is going to be hard. Now, it's totally possible. I mean, people peg their currencies to the US dollar, right? Countries do that, and they give up complete control of their monetary policy on the back of it. So there is every possibility that the Venezuelas of the world and so forth could do the same, right? And that'll create a pretty interesting situation. But I view, that as sort of down the road. I think if Bitcoin achieves some sort of critical level and volatility gets stripped away a little bit, and people will be less likely to be incentivized to use it as a medium of exchange, then that could certainly happen. But for now, it's purely speculation, right? People are owning Bitcoin because they think it's going to go up in value. I think in the future, the only use case in my estimation is store value, right? This notion of digital gold, this digital scarcity, which Rob referred to. I mean, this is what's attracting the Paul Tudor Jones of the world and so forth, is the possibility that this thing could serve as an inflation hedge, which means, something that could actually retain its value over time in the midst of all the other madness, going on in the world. But that in my mind is again contemplating a theoretical future state, because we just haven't seen it yet. But it's certainly that's really kind of the primary impulse, and that in my mind is what's going to attract, the smart money, the Paul Tudor Jones, the big institutions that come to the space. Michael Saylor obviously has done it in a pretty big way. I think more and more people are going to latch on to that store value notion, and that'll be what drives real adoption over time, in my mind.
Yeah.
Sorry, go ahead.
And so,
I think Rob's going to.
Well, we've got a question too. Like, how does the value of the asset?
I think we're getting a little bit.
I'm getting a bit of a slow connection, so I'm gonna.
Yeah, that's
you go ahead.
I'll respond and to your original question, Mike, and then we'll see if you're kind of back on stream. But yeah, I mean, I would largely agree with Matt. This is definitely a speculative store value at this point, by and large. There definitely are use cases as for a medium of exchange. Forget unit of account. The volatility is off the chart, so it just makes no sense to really price anything for any length of time in it. That's probably a long way off. So yeah, it's speculating that this will continue to be used as a store of value. Speaking to the government side of things, which is one of the big fears, I think absolutely you're going to see continuing bans. I mean, China's banned, they've unbanned, they've banned, and they've rebanned again. Expect that soap opera to continue, and we'll see that. And I don't even think we've seen the beginning of the real battle with governments, because this is ultimately, if you believe in it as a store of value and it starts actually increasing in value, then you're going to run head on with the central banks of the world. And I think we all understand that they are in no way, shape, or form willing to give up the ability to print money, which is the seat of their power more than anything. So that battle's coming. And this is why it's very important to be a decentralized network. And this is why the altcoins that don't have this decentralization, where they have figureheads, actual people that can be, subpoenaed, jailed, whatever, you need to be truly decentralized. And Bitcoin is the only network that comes close to a true level of decentralization at the mining level and the node level, and for that matter, the developer level, although that might be kind of the most easy vector of attack, is actually attacking the developers and the GitHub repository and things like that. But if you don't have that, then you're more vulnerable to it. What I expect to see is jurisdictional arbitrage, and we've already kind of seen that kind of in a light version. Or as I said, we've seen China, we've seen India ban it, we've seen lots of countries ban it, and then they flip flop. You're not going to see every country ban it at the same time. And if they do, if one country bans it, they're banning it because it's working, not because it's not working. So that is an endorsement. So okay, if you want to ban it in the U.S., go ahead. We're going to Malta. We're going to Argentina. We're going, maybe not Argentina. They'll probably fight it pretty hard, but they'll go somewhere.
Rob, on that a little bit, because I think from a sort of reflexive argument there, the very fact that it's super decentralized and kind of outside of the purview of the monetary system might be the major hurdle for it to grow into the institutional space because of what you're describing. So right now, Bitcoin is what, a 220 billion market cap, give or take?
No, like 240 billion, roughly. 240
billion. Okay, so I got it wrong by an order of magnitude, but it's still
super small though by any measure.
Yeah, and the diehards, the cypherpunks, they're going to hodl their satoshis, and they're probably not going to want to use it as a medium of exchange. And Matt was describing people in Venezuela. They're probably going to want to actually use it as a way to escape hyperinflationary scenarios like that. But once it's no longer flying under the radar, and it does become a real threat to central banks' abilities to keep the party going in the manner that we're seeing, and now MMT within the Overton window, probably coming into policy sooner or later, isn't that going to probably scare away some of the bigger institutions that might bring this asset class into the next stage of its evolution, as you guys are describing it?
Well, it's already scared them away. They're just coming around one by one. So yeah, it's a completely novel asset. There's no precedent, right? Currency is issued by central banks and countries. That's what we've known for the last 200 years. And so now you've got to get your head around the fact that it's a bunch of cypherpunks that have, an open source development and people running nodes somewhere, some way, and Chinese miners in whatever you think it is. You've got to get your head around it. But if you don't, then you've got to look at kind of what the reality is that you're left with. And the reality is crazy MMT and buying ever escalating overvalued assets or becoming more and more of a speculator. I mean, this is what is driving people and thereby and ultimately institutions to it. We're all forced to be speculators, crazy speculators, because the money printing is distorting the price signals so much. So how do you at a certain point, the pot gets so hot that you start thinking outside of your normal, paradigm. You're like, well, how can I avoid, and we've seen that in countries where things are more advanced. We've seen it in Argentina. We've seen it in Venezuela. We've seen it in some of the African countries, right? There's big premiums in some of those countries to Bitcoin because it's needed now. So you're right. Like, yeah, this is not something that, the masters of the universe who run these hedge funds, they don't really probably want to contemplate it. But if they don't, at some point, the world's going to flip potentially into pricing everything in Bitcoin. And then your returns aren't going to look so good.
Matt, you want to take a crack at
Yeah.
Or are you fully in agreement and Rob's?
Yeah, I mean, look, I appreciate Rob's enthusiasm, and I think it would be it'd be amazing for all of us if assets were one day priced in Bitcoin as opposed to U.S. dollars. But I think the most realistic long-term kind of strategy for Bitcoin is just to go away from the medium exchange side of the equation and just focus on the store of value and be happy with that. And I think, thinking about the US government and other governmental authorities who want to retain control, it's sort of the boiling frog, in the water. Just allow it to sort of slowly chip away at the periphery. What is gold, an $8 or $9 trillion market cap today? Bitcoin is 250 billion. there's a lot of real estate between there and here. And just let it kind of slowly do its thing and let it earn its stripes. And that's a value add, right? In this moment in time in particular, given all the money printing going on that we've discussed, that store value thesis makes sense. And just let that play out, right? And if it just does that, and more institutions want exposure because of that thesis, and just do away with, we want to be able to go to the grocery store and purchase things in Bitcoin. Let's just forget about that for now and just appreciate it for what it is, which is an emerging store of value. And that'll give you a much longer runway where, the authorities of the world, I would imagine, are less concerned about people deciding, hey, I'm going to own some gold, I'm going to own some art and some wine, and I'll own some Bitcoin, and just let it happen sort of naturally that way.
And maybe outside of the VC bucket, but rather sort of maybe substituting part of the gold, precious metals, that part of the alternative bucket in general. Do you see that as something that might be the reality for Bitcoin institutional holders in the coming years?
So I do. Obviously, I'm talking my own book here a little bit, but
plug away.
Look, I as referenced earlier, in my estimation, the primary use case right now is speculation. And even when people put statistics up there around, there's been $1 trillion or what have you in terms of transaction activity, right? The reality is all that activity is, for the most part, people just trading on exchange. And so I view it purely as an asset class to trade, right? And of course, I am longer term bullish in terms of the space broadly defined, not just Bitcoin. I think there's so many interesting ways that this space can innovate. I think there's all sorts of crossover potential around tokenization and so forth. I'm definitely bullish, but I also try to be a little bit pragmatic about the here and now. And in my mind, the here and now is, first of all, how often are you introduced to an entirely new asset class, right? Like, when does that happen? Not often, right? And we're witnessing it, and we can trade it now in the here and now. So Bitcoin trades as much as spiders do daily, right? So it's tradable, and it happens to be incredibly inefficient by virtue of the fact that, of course, it is a nascent asset class. You have, sort of developing yet fragmented and very immature infrastructure, with all this, different trading venues across the world, different regulatory regimes, different instruments that can be traded, emerging instruments around derivatives and options and what have you. So there's so much opportunity for, call it arbitrage per se, right? And unlike, the liquid capital markets that we're all accustomed to, that are 90% dominated by institutions, this is a space that's dominated by retail flow, right? And so if you're coming and facing off as a professional investor, whether you're a former FX trader or quant or what have you, you come into this space and it's just ripe with opportunity, right? So I view it as purely an asset class to trade at the moment. And to the extent we think about, what does that mean for us and our business? You've got an incredibly interesting risk return profile available on the back of the fact that this is such an inefficient asset class, right? And there's so much alpha on offer. And that, when we think about what's going on with absolute return portfolios for most investors and their broader asset allocation, there was a point in time when hedge funds could deliver on the original promise, which was to maximize absolute and risk-adjusted returns in uncorrelated fashion, right? But today, as you all know, hedge funds are LIBOR plus, right? No volatility to speak of. Hopefully that Sharpe gets close to 1, and hopefully they're somewhat uncorrelated. That's just less interesting because a lot of the opportunities have been arbed away and markets become much more efficient. Whereas you come here, and it's the early days of hedge funds, right? Back in the days when all the ex-Bob Rubin risk arb guys were crushing it because their spreads were so fat, and then those spreads got arbed away and they became something else. It's the same thing now, like early innings now, for folks that are willing to go out there and set up vehicles to capitalize in a liquid form on an incredibly inefficient asset class. And one more thought on that. We think about it in terms of binary versus continuous thinking, right? So most of the arguments in favor of Bitcoin, for example, are around, this asymmetry, right? Which means, Bitcoin goes up or it goes down, and then with VC allocations, which we love, by the way, because they're helping to fund the infrastructure build out that's required in the space. But VC is sort of binary squared, right? It's betting on the future of blockchain technology, happening or not. Crypto sort of going up as an asset class or going down. Entrepreneurs executing or not, right? So that's very binary in its thinking, whereas we think about things more continuous. So along the spectrum between the denialists and the maximalists lies a whole host of opportunity in between that, they're there purely to trade the chop. Volatility is a good thing and can make money theoretically in up and down markets. And so if I were an institution thinking about attacking this space, I would contemplate that sort of barbell approach, having a less liquid approach that's geared more towards, the future 7 to 10 years down the road, and a more liquid approach where you can kind of solve for both outcomes.
Yeah, that makes sense. I think Mike continues to have a little bit of a technical difficulty there, but I think he was going to pull on the thread of Jason Mackey's question, which is how do you value an asset that is completely replicable? And why should any one digital asset class created out of thin air be worth more than any other? Right. And I think that dovetails into what we might be moving into, I think, for this conversation, which is we focus a lot on Bitcoin, but I think there's, these other crypto assets. Matt, you're actually focused on the space as a whole. So I think it might be interesting to maybe tackle this question, both of you, but I think maybe discuss a little bit more of some of the other assets and why perhaps Bitcoin. Is it just because it was the first one, has the longest blockchain, and perhaps it is the one that everybody benchmarks themselves to? But why don't you take over?
Well, we have our first Bitcoin myth, so ball's rolling now. Yeah, look, the code of Bitcoin can be copied. It's out there. It's on GitHub. It's designed to be fork away. But so you can get the code, you can get the UTXO set, right? Which is basically a fancy way of saying the Bitcoins, right? Of the same database. And that's happened. We saw that the fork wars of 2017. We had Bitcoin Cash, we had Bitcoin SV, and everyone who owned Bitcoin at that time now were owners of Bitcoin Cash and Bitcoin SV and Bitcoin Gold, and there's some worse ones than that. But what they can't replicate, you cannot replicate the miners, you can't replicate the devs, you can't replicate the network effects. That's where the value comes from, not from the code, which anyone could see at any time, not from the UTXO set, which is out there in public blockchain. So, and this has been the flaw in Peter Schiff's thinking all along, right? That it has no intrinsic value and I can copy it. Well, yeah, you can create Peter Coin tomorrow. You can create the same exact rules. So why don't you, right? Why doesn't anyone? Because they don't have the other factors. And that's just what it is. It's actually that simple.
Matt, anything to add there? And I guess sort of getting into some of the other coins, maybe talk a little bit about Ethereum and Litecoin and some of the other majors, let's call them, and why Bitcoin as the standard bearer of the space.
Yeah, so I guess, maybe playing a little bit on Rob's previous point, sort of the protected nature of Bitcoin in the context of digital assets more broadly. And this speaks a little bit to some of the thinking around Michael Saylor and what he's talked about on the topic. Sort of Andreessen back in the day, software eating the world. Within the context of digital assets, it's clear that Bitcoin's kind of eating the world. It is the winner in the sense that one of the beautiful things about this space, it is kind of cutthroat capitalist, so to speak, in that people vote with their feet. And it's very democratized in that respect. And so to Rob's point around, there's already been forks. People vote with their feet, right? And you've got Bitcoin Cash and Satoshi's vision. And obviously the market sort of looked at those and puked them out and went back to Bitcoin. And Bitcoin continued its steady march, right? So it's certainly possible, though, in my mind, that there could be another innovation somewhere along the way that the market decides is more interesting, right? I think replicating, to Rob's point, this notion of decentralization, it's sort of interesting. Satoshi Nakamoto comes out of nowhere, writes this white paper, and the next thing you know, 10 years later, it's a $350 billion market cap, right? It's a pretty remarkable situation. And the sort of the Nakamoto consensus algorithm and what have you is sort of beautiful in its simplicity. And again, I'm not a technologist, but the notion of being able to solve for a group agreement and or disagreement in purely algorithmic fashion is kind of interesting, right? And the fact that it is decentralized, that no one can sort of push the buttons, I think speaks to sort of the strength and the ethos that underpins Bitcoin as really sort of a belief system, right? And so it's hard to imagine. It's going to be really hard, I think, for someone to come and chip away at that. However, ETH has a lot of, I think, utility, right? This whole notion around smart contracts and so forth, I think is super interesting, super helpful. Can do a great job of eliminating middlemen in the form of lawyers, for example, much more cheaply. And there's all sorts of other coins out there that have potentially some degree of value and utility to them. I'm open to that. I'm here for it. I hope that happens because I think it'll be an interesting evolution in this space. I think if it's only Bitcoin, then that'll be a disappointment in my mind to see, again, the emergence of an asset class not really happen, right? And it end up just being one. I think there's other types of use cases out there. Carve out the store value use case for Bitcoin and then move along to other ones potentially with other coins. I frankly would love to see that because that just creates more opportunity for us, of course, in our business.
So I've got a couple points to add on there. So, I said it was that simple in my last comments, but Matt, what you said there in terms of people, didn't want to obviously get on to the forks of Bitcoin. And I think we're trying to articulate what we call the Schelling point, which is, the fancy way of saying that people kind of agree on one form of money or they agree right on a common form of exchange. And you typically, as we talked about earlier, converge on one form of money. And at least that's, Bitcoin is that form relative to any of the forks. So that's, I think, just maybe hopefully better stated than what it was before. But you also said it was there's a belief, but it's not just belief. This isn't I think it's more properly talked about as proper incentives. And that was, I guess, the genius, if you will, of what Satoshi Nakamoto created in the game theory that exists with Bitcoin. The incentives for miners to spend their energy, their resources, in exchange for a token, which then is exchanged only if the blocks that the miner form are properly formed and the nodes, enforce those rules, the so-called consensus rules. So I mean, that sounds like gobbledygook, but which is what makes it difficult in many respects to appreciate. But within there's deep incentives. You don't have to have a belief. You just have to follow your own incentives. And that's why it works across time and space with multiple parties that don't know each other. And so that's important, I think, just for people that we're not trading on faith here. And beyond that, I envision a much different future where we have a lot of things being built beyond just a store of value, even medium of exchange, unit of account. My vision of how we get there, I think, is not multiple coins. I believe we should be building kind of in a modular fashion with Bitcoin as that base layer. And there's analogies that you can make kind of in the tech world around Unix and other computer systems where it's very simple and modular, and you have so-called kind of ossified layers where things don't change. I guess another analogy where people might understand it is the internet, where we have the TCP/IP layer. This is, sort of the nuts and bolts of the internet. That doesn't change, even though there's lots of reasons why we could make a better, way to exchange information than IP addresses. We actually are pretty much running out of them, but we don't because it's stable and people agree. There's sort of a Schelling point with TCP/IP that this system works, and there's more value in that stability, and then adding layer 2 and layer 3, whether that layer 2 is Lightning, and then layer 3, who knows what it looks like, and layer 4, layer 5, on and on, so that ultimately we have a very robust kind of DeFi system. and we can have smart contracts, but we're not building it out of the gate. And that's my issue with Ethereum and other coins or other networks, is that they tried to build in too much functionality, too much complexity at the base layer. And that's why you continually see hacks at the base layer, which you've never seen with Bitcoin. Bitcoin has never been hacked, right? You've had exchanges get hacked, and people confuse that with Bitcoin being hacked, but Bitcoin has been attacked. It is probably the most hardened computer network that's ever existed. There could not be a bigger honeypot than Bitcoin, and it has resisted every attack. And that brings us into sort of the Lindy effect, and the fact that it's existed for a long time, and the longer it exists, the longer it is likely to exist. No other coin has that, and I think it's because of some of the choices that were made that and so there's still being changes made at the base layer. There's propositions of putting in Taproot and changing to Schnorr signatures, and these get into technical details. But there's a debate whether we should even do that, or whether it should just be left alone and build on top of it. And let's go with Lightning. Let's go with Liquid. Let's go with these second, third layers. I very much favor that approach. So let the games begin, I guess. But yeah.
Yeah, I suppose where I might deviate a little bit there is, again, I appreciate why Bitcoin is the dominant coin in the space and why it will likely remain so for the foreseeable future. But one area where I disagree, I think, with the maximalist idea around Bitcoin is, I just find it interesting that folks that are indeed maximalists are willing to sort of poo-poo gold, for example, as an alternative, which has been around for millennia, right? And Bitcoin has been around for 10 years,
I agree
10
with
plus
you on
years.
that. I think there's a real role for gold. Yeah, I agree. For what it's worth.
I mean, I think there's a role for gold, but also just so Bitcoin's been around for 12 years or whatever it is, and suddenly supplanted gold in the minds of maximalists that has been around for millennia, yet there couldn't be something else that comes along to supplant Bitcoin, right, in terms of relevance and dominance. Again, I think it's unlikely, but ideology, in my estimation, I think Paul Graham said is constraining. And I just like the idea of being open-minded, right?
How would that play out, though? I've thought about this, and I can't conceive how you could have the so-called immaculate conception of Bitcoin, because everyone knows that it exists and how it exists.
Yeah.
And so I think that's maybe one of the biggest threats, conversely, as well. If there was some sort of unknown failure, say quantum computing, and even though there's reasons to think that you could, work around that, but let's just say it fails. I don't know how you would easily recreate the Bitcoin network, because everyone would be like some crazy ICO, right? Everyone would want a piece of this. So, but similarly, I just don't see anything supplanting it. How can you have that fair distribution? How are you going to replicate? There's no functionality, right, that Bitcoin can't incorporate at some layer. It's not, privacy. People talk about that. They talk about fungibility. Yeah, those things can come at layer 2 and layer 3. The important properties can't be replicated.
Well, one of the important properties, which is maybe neither here nor there, but it is one thing that fascinates me, is the fact that Satoshi Nakamoto, if it is an individual or a group of people, has remained completely anonymous, right, throughout this entire period.
Which is a feature, right?
Which is a total. That's why, maybe to your point, Rob, how do you replicate it, right? Part of the magic there is this person or people who created this thing basically just put it out into the world, accumulated, I think, 1 million or so Bitcoin along the way as part of the Genesis block and thereafter, and has not done anything with it, right? Basically just stayed silent.
Scarcity to the space by not. I think there was talk recently that there might have been a little bit of a movement in his account, but from when I actually looked into it, he hadn't moved it since the very beginning.
His coins haven't moved. There were some very early coins that moved, but yeah, there's very strong circumstantial evidence as to which coins are his.
Do you think that it was a guy? There was a guy called Satoshi, or do you think that that's a pseudonym for a group or a particular guy? Do you guys have a take, or does it even matter at this point?
I have a theory, but only because I think it's a fun one. I don't think it's true.
Let's hear the fun one first.
Yeah.
And I doubt I'm the first one to think of it this way. But, I would love, I like the logic around Elon Musk being behind this in some form. Only because you think about it, you need someone with moonshot visionary thinking, right? You need someone with the technical chops to pull this off. At that point in time, he was knee deep in PayPal, which is all around, he knew his way around, payment rails and so forth, probably encountered a ton of annoyance with all the different regulatory structures and systems. And given the fact that this person hasn't moved their coins, which at this point are probably worth like $15 billion, they need to be wealthy already anyway, or they're dead, right? So those are the only two outcomes, or they're the most extraordinary human being in the in the history of mankind. But I think that's already been poo-pooed. But I kind of like the logic of it.
His cryptic tweet a while ago sort of added to that to the mystique around that theory, which I've heard as well, right? I forget what it was, but he did drop a hint around that theory at one point.
Well, I know he's actually said he owns like 0.2 Bitcoin or something. But of course he would say that, right? If you're Nakamoto, of course you're going to say that, right?
How about you, Rob?
It's probably one of the people that have been identified. I think it's one individual. There's Hal Finney, there's Adam Back, there's Nick Szabo. Probably Adam Back.
Not Craig Wright?
Yeah, no. No, that actually, yeah. Everyone's Satoshi except Craig. Satoshi, yeah.
How about guys?
But it doesn't matter. It's what matters is that they are anonymous. It's so much better that way. And I think the coins haven't moved, probably because it's be incredibly difficult to move them without de-anonymizing yourself. And so I do think they will be moved, or value will be extracted from them at some point, though. I don't think they're lost.
Yeah,
there's a lot of material out this if you want to. This is the least interesting part of Bitcoin.
Mike,
You look at the most common. I am back, yeah. This part is going to get all the comments for sure.
Yeah, exactly. Who's Satoshi Nakamoto? It's Elon Musk.
There's another question.
He's a Dogecoin supporter. I mean, come on. He's pledged his allegiance.
That's right.
That's what my kids like. They like Dogecoin. I mean, how could you not?
There's another question that I thought we might entertain, and I think this dovetails a little bit with what Matt mentioned earlier about Paul Tudor Jones owning crypto, but owning Bitcoin, but doing so through futures, so not in the purest sense. And so any thoughts on the development of crypto ETFs? So what are your thoughts there, gents? That might attract more people into the space because of the whole difficulty of actually having a digital wallet, and a lot of people might see that as too steep of a curve to embrace. Probably not the institutional space, obviously, but what are your thoughts there? Do you think it's a less legitimate way to play the field?
Well, legitimate is a loaded word, but not your keys, not your coins, but it's probably a decent proxy for exposure to the asset class. Again, depending on how it's constructed, and there's a lot of devil in the details. So we'll see. I don't think it'll be that long before we see an ETF at this point, right? They've been bouncing off the regulators for quite a while now. I actually am a little maybe contrarian to a Bitcoiner anyway on this. I'm not waiting or even hoping for an ETF. I think it creates elements of centralization that kind of were the whole point is to avoid a lot of them. And yeah, there's risks, I guess, that come with that centralization. Like what happens if there is another fork, even though I don't believe that. I think that the forks are over, but then you've got, an administrator making a choice as to which chain you follow. there's things that are outside of your control. And that's the issue with gold, right? A lot of Bitcoiners have with gold is that it's become centralized, right? It ends up in a bunch of vaults and governments can seize it. And you have a certificate, you have a claim, but it's been hypothecated, it's been lent out. Does it even exist? Let's audit the Fed. So, it pushes Bitcoin a little bit in that direction. That being said, it will open it up for more people to buy it. So it probably is going to help the price.
So we have some, we've got, what is it? We've got,
I would certainly agree with that. I think, relative to some of the alternatives at the moment, right? So there are, so the Grayscale Bitcoin Trust, for example, is probably kind of the closest estimation to it. But I think, we have seen, obviously there are some unintended consequences on the back of that, right? As retail gets exposure to it via OTC, at a premium, right? So that obviously, I think in my mind, sort of necessitates the development of an ETF, right? Particularly to the extent the SEC is interested in protecting retail investors and so forth. I think it makes it a more efficient way to access. And I think it also saves them from the potential pitfalls around managing their own keys and what have you, where they're just not quite, maybe technically proficient enough to understand. If you've got someone who can do that for them in a relatively liquid form and hopefully accessible and cheap form, then I think it's probably necessary. I totally appreciate Rob's point around, the potential downsides of that. But it seems to me it's an inevitability. It's probably a healthy development, I think, for the space more broadly.
Don't we want the financialization of the asset class more and more, though, if it's a speculative asset?
Yeah. If you're just purely concerned with price, then you want ETF, you want every kind of access available to the retail or institutional investor for that matter. But the financialization, I would say, no, not necessarily. Like that implies all the things that I just kind of spoke about, where we're lending, we're fractional reserve. Like that's where a lot of the problems that I think Bitcoin alleviates, stem from. So, yeah, personally, I'm not looking for the financialization, although it's coming. I mean, Matt has some great points. I actually agree with all those. People are not, by and large, in a position to manage their own keys, especially with the current state of it. It's difficult. It's technical. It's prone to loss, and a lot of people are losing their Bitcoin. So, as much as I say not your keys, your coins, I can in the same breath say like it's a risky thing that requires a fair bit of attention and maybe some technical chops to pull off. So an ETM does democratize that access to it, and in that respect, it's a good thing.
All right. Did you guys talk about how did we talk? I missed some of this. So did we talk about how an investor might consider this as a portfolio asset at all? Was that covered? Yeah.
Yeah, I think so.
Good. Okay.
Awesome. To a large degree, I would say so. So I guess, we're running up at around an hour, 20 minutes. Just to maybe sort of summarize this and for any kind of institution, family office, someone out there that is considering the space and thinking about how maybe getting access to it, if you guys were to summarize how they might consider it for a portion of the portfolio, I guess dovetailing slightly with what Mike was asking. Best ways, focus on Bitcoin, go purist.
Irresponsibly long.
I had no doubts, Rob. You're the biggest hodler in this group here by far, no doubt.
That's like, I've got a fund. Rob's like, you should just be long. We're doing a bunch of
obviously we're I spoke to it a little bit earlier around the barbell approach. I think there's certainly the directional nature of the exposure, which makes great sense. But there's also that more perhaps less directional nature, which just capitalizes on the inefficiencies on offer, which can allow for more continuous thinking, which doesn't sort of command 10-year plus lockups doesn't command willingness to stomach 75% drawdowns. I think there's a number of different ways to skin the cat here. And I come at it from the hedge fund side, putting aside the philosophical belief in Bitcoin and crypto and how it can be world changing. I come at it more as a trader and view it as just another asset class to trade at the moment, which just so happens to be incredibly inefficient and therefore highly compelling.
I've got a question for you, Matt.
Yep.
So Sharpe ratio, there's a debate straight off of whether that's even an appropriate way of assessing Bitcoin returns. And
it's not. Yeah.
And I can think of a number of reasons why it isn't. So I guess you've kind of answered part of my question. But if it's not, why not? And how do you assess kind of the risk versus return profile when it's so asymmetric? Yeah.
So so the Sharpe ratio is in our mind suboptimal purely because it penalizes volatility up and down, right? And so naturally, the hope and expectation is that the vol will exist certainly to the upside. And even in a relatively kind of, call it hedged or opportunistic format, you can still capture a decent percent of the ups while mitigating the downs. And you don't want to be penalized for that because your Sharpe maybe is going to be a little bit less appealing, but your Sortino is going to look nice, right? So we think about risk adjusted more in Sortino terms. Even Kalmar, for example, could be interesting for this space where you're just looking at the annualized return vis-a-vis a peak to trough drawdown, which could be another way of thinking about things, which we do. But I agree with you, Sharpe is not the appropriate metric here.
So would you say Sortino, given that?
Yeah, that's the way we think about things is Sortino. We measure ourselves in Sortino terms, not Sharpe terms.
That makes sense.
Get the ulcer in there too. Anyway, moving on.
But I guess to just sort of put a bow on that earlier question that I had, other than Bitcoin, Matt, maybe you take this one first. But since you're looking at the space as a whole and looking for arbitrage opportunities, what are the other interesting coins that you're looking to speculate? If you're so inclined to speak to talk your book up a little bit more.
Yeah, no, I mean we're not. This will be a quick answer for Rob. I know he's smiling over there. We're more interested in the trading aspect, right? And so we're not wedded to any particular coin. We think there are some interesting emerging theses around DeFi, for example, which could be interesting. But again, it's all for us. It's a trade, and I think that means we gravitate more towards the top 10 coins. And again, we're interested in folks that are just trading them, right, and arbing them. And we're not here for the buy and hold. We're not here to sort of underwrite a thesis around, ETH as a platform and vis-a-vis Bitcoin. We're just here for folks that are extracting inefficiencies, and that's what we're focused on. So I'm afraid I don't have a super interesting answer there, but maybe a little bit more to say than Rob, who I know is just going to say buy Bitcoin and call it a day.
No, well, look, actually, I can be a little bit more nuanced than that. So I accept that there's absolute inefficiencies in the space. I mean, it is nascent. All the reasons that you kind of mentioned, right? Like it is ripe for exploiting those. So I accept it. I mean, does that give you exposure to the space? I think there may be fundamentally different things. There's nothing wrong with that. It's just what are we getting exposure to? Like you trade, you could arbitrage. You could pretty much pure arbitrage Bitcoin for quite a while. Even the last run up, there was big premiums in South Korea and other places. So and people were doing that, right? You had guys running across the border from South Korea to Hong Kong with Rolexes and stuff. I mean, it exists and it will continue to exist for people who have the tools and insight that you guys have. But if you're arbing out those inefficiencies from day one, you probably would be not any better off in absolute terms for sure than if you just hodled. So there's a lot of nuance in between that and Sortino ratios and risk adjusted returns. So I don't think we're necessarily disagree. I think it's just what kind of exposure do you want? How do you use your exposure to crypto? I like the fact that you're not trying to take a kind of a naive diversified approach and saying we're going to hold a basket of the top 10 cryptos, because the top 9 cryptos probably don't have a use case, in my opinion, and that's a reason why they keep turning over every couple of years.
Yeah.
It's a lot different than holding a diversified basket of stocks and companies that have proven businesses or something that they're doing that adds value, or other than just issuing a token and creating kind of a Wild West speculative market. So I appreciate that orientation, and yeah, there's folks that are doing it, and they should do it, right? Like, it's going to take a while to mature the ecosystem.
Yeah, and I view it at more. You bring up a good point around, does that make sense to solve for exposure, right, to the space?
Exactly.
And we don't view our job to come in and speak with clients around the notion of here's why you should have exposure to the space, right? We don't think about things in terms of, let me tell you what Bitcoin is, and let's go through this whole educational process. We think about it purely in terms of risk return. That's it.
Yeah, which is perfect.
These are just numbers on a screen. This is another asset class to trade. And the one thing that I find, a little bit challenging, of course, is there's plenty of investors that think about things in terms of, we don't invest in things we don't understand, right? And of course, they want to get educated, which is great. But it's just kind of interesting because you encounter these investors who had lots of exposure back in the day to CDOs and CDO squared and so forth. And there's plenty of things that they have exposure to that they don't understand. And our point is, we're trying to sort of disarm.
Goldman sold it to me, so it must be good.
Yeah. It's like in our minds, of course you should try to understand and become educated, but for us, it doesn't require a ton of technical proficiency. You just need to understand, look, this is an asset class to trade. These are numbers on the screen. A quant is a quant, and ARB is an ARB.
The underlying something different. You don't have to care about that. It's all settled off, into fiat, and So I think we absolutely see eye to eye on that.
Yeah.
If you can get someone to just give me a call and explain the derivative books of any one of the banks, just so that I can understand it before I invest in a high dividend, safe company, please have them give me a call.
Yeah, I'm still waiting for that too.
By the way, is Mike speaking? Because I can't hear him at all. So I see you guys nodding, and I'm like, are you guys reading something?
Yeah,
or
he is
speaking?
He was commenting on the derivative books of the banks.
Okay.
And how much he would love to understand them, as we all probably would.
Right. On that note, gents, it seems technology might be getting the best of us. So I want to say thank you to both you, Rob and Matt, for taking the time. I know we've taken hour and a half of your time today, and it was great. I mean, it's a nascent field. I know close to zero about it, so it was a great learning experience for me. I hope everyone that's watching and listening did as well. And Mike, any closing remarks?
Nope, just thank you. You guys did a great job carrying the torch without me, and the show always must go on. Good job.
All right, gentlemen, enjoy your weekend. Thank you for joining us.
Thanks so much for having us on. It's a lot of fun.